So in this market outlook video, I'm going to walk you through the key levels and the buyers for the next trading week, which is going to be the 19th of April to the 23rd of April. So for this week, we had a very good week. If you are from our Telegram channel, you will know that we had a very profitable week. Okay, we did about 289 profit in pips, and also another big trade in Nasdaq, which is a Nasdaq long position that gave us about 255 points in profit. So it's been a very profitable week, and we hope to do the same for this week. Okay, so if you're new to this channel, you just join us on Telegram, make sure you hit the subscribe button because we create a lot of videos like this. Okay, if you're a YouTube subscriber and you have not joined our Telegram channel, please go join. The link is in the description. Okay, we send out all our signals through the Telegram. Now back to the market outlook video. So this week we're going to prepare for tomorrow, which is the 19th of April. So as always, we always start off using the MPE trading strategy. Now, for all of you who are new and you do not know what the MPE trading strategy is, okay, we have a 3-day trading guide that we prepared for you. Okay, it's a very comprehensive guide. It's about, I think, 33 pages long. So this guide is totally free, and in this guide we teach you the MPE trading strategy, and I'll leave a link to that in the description down below. So if you're new, please go get this. Okay, so in a very short refresher, let me just go through. M stands for market condition. We always look for the market condition. Then we look for the price level, which is the important levels that we want to look for a trade. And lastly, we will look for an entry trigger. So I'll be using this MPE trading strategy to analyze the market and show you the key levels to focus on, so that you can trade the wick and you will avoid, perhaps buying into resistance or selling into support. Okay, so let's go into the Forex Factory economic calendar. Just have a look at what is going to be happening next week. So you can see that there is the Canadian news. Okay, this is a rate statement. Okay, there's ECB. Okay, so personally, I always say on this channel that when there are conferences like ECB statements, all these kind of things, like this monetary policy statement, it's going to be a very tough week to trade, okay, because the market will be very indecisive, and it's also natural because people are waiting for the press conference. Okay, think of it, if you're an institutional trader, you won't want to take a very big position going to ECB. Okay, so please be very patient, just wait for after this event, ideally after 8:30. For me, I'm based in GMT plus 8, so it will be 8:30. But for you, just check out what time is it over at your place, and just try to be patient the entire week. We don't expect the market to be like last week, or rather this week, where we took so many trades. But nonetheless, please just be careful. So let's go into the charts. Let me show you the key levels. So let's start off with DXY. This is dollar index. Now, dollar index shows you the direction of dollar. Okay, and previously we've said that dollar is in the uptrend because you have a high, you have a low, higher high, higher low, higher high. However, there's this ascending trend line which was broken. Okay, so right now price is very near support. So what I'm expecting is that price is going to rebound, okay, to form what is known as a head and shoulder pattern. So let me just show it to you. This is the left shoulder, this is the head, and this is the potential right shoulder. So this is what I'm saying. So we probably will see a bounce in dollar. Good to understand that, okay, this is still in a bullish structure. However, it seems that price is at a key support and has the potential to bounce up. So if you have this bias, then you probably want to look for short trades in like euro dollar, because if you short euro dollar means you are buying dollar. Or if you short pound dollar, or if you go long dollar franc. Okay, so this is how we use DXY. Personally, I do not trade off DXY directly, but if you want to, I think it's fine as well. So let's move on to euro dollar. So euro dollar right here, let's talk about the trend first. Okay, remember that we need to go through the step by step, which is a market condition. So the first question to ask yourself is, what trend is this? Is this bullish or this bearish? So it's a bit tricky because you have right here, you have a low, you have a high, you have a lower low. And right now price seems to be breaking this high. Okay, so it's not too clear. But one thing that I want to point out is that if price were to drop back here, then there is an inverted head and shoulder pattern. So you will have the left shoulder here, you have the head here, and then you have the right shoulder. Now, personally, I'm more inclined to do this. Look for a trade setup. Okay, again, if that's the case, then you are doing more of like a reversal play. Okay, but if you look at the grand picture since about over here, which is about March, you can see that price has been in an uptrend. You have a high, you have a low, higher low, higher high, higher low, higher high. Okay, and this low is not broken yet. So in that sense, you can argue that still in a bullish market condition. Or if you were to look here, then it's going to tell a different story, which is a low, high, low, lower high, and lower low. Okay, so most important is to watch this level right here and see whether price breaks above. Because if price does this, then what we have is we don't have a lower high anymore. We have a higher high. Just that we do not have something like this yet. We do not have price, making a high, a low, and a higher high to confirm the uptrend. But nonetheless, price is at resistance right now. Personally, I would wait for price to just retrace here, and then it's symmetrical to the left shoulder. Look for a candlestick pattern here. Okay, could be a bullish engulfing pattern. Okay, I actually wrote it here. Could be a hammer, bullish engulfing pattern, and just take the trade and target here. Okay, I think that would be a good trade setup, and chances are your risk to reward would also be quite lucrative. Maybe something like, let me just adjust it. Something like 1:1.93, which is okay. So let's move on. Let me just close this and let's move on to a pound dollar. Okay, pound dollar, it's quite similar to euro dollar. It's parked at a resistance. You can see that this was the previous level that I've drawn. And based on the analysis that I've done last week, I highlighted that there's a small left shoulder here, head, and a potential right shoulder here. Okay, so this scenario, I would prefer to look for a short somewhere here, okay? Because remember, if you do your MPE trading strategy, M stands for market condition. And you have a low here, you have a high here, lower low, lower high, and a lower low. So right here, I'm looking for a short setup, okay? If I can get a shooting star pattern, or maybe an evening star or bearish engulfing, then I can go ahead to take the trade, okay? So always remember that we are always doing the MPE trading strategy. Okay, the risk to reward is very good as well. Okay, always stick to the MPE trading strategy. Ask yourself, what is the market condition first? Okay, are we in an uptrend or in downtrend? Okay, if you're in an uptrend, then you should be looking to buy. And then the next question will be, where do you buy? Where do you look for a long opportunity? And once you identify the level, then you need an entry trigger, which will come in the form of a candlestick pattern. Okay, it's a very simple strategy, but it's very powerful. So stick to this strategy if you're new. Okay, it's a very good strategy to keep you grounded, right? Because there's a checklist, just follow it. Now, moving on to dollar franc. Now, dollar franc is a bit tricky, okay, because this is a low, this is a high. Sorry, this is a high, this is a low, this is a high, this is a low. Okay, so it's an uptrend. However, if you were to look at the recent price action right here, this is a high, this is a low. Price has just violated the swing low right here. Okay, so that means that the uptrend is no longer intact. Okay, we could potentially see a reversal. And on Friday, it seems like the price has actually just broken the swing low here. And this is actually an evening star pattern. If you recognize it, you have a doji and then a engulfing pattern. This is an evening star. Now the challenge with this is that if you were to look over here, let me just highlight it for you over here, somewhere here, you can see that this entire zone is actually support. Okay, if you were to draw it something like that, you can see that this entire zone is support. Now the problem is that we do not know whether this will act as support or not, because this price action is quite strong. So this is a risk, right? If you want to take the trade and you do something like this, which personally I would, because the risk to reward is really good. Okay, it's about 1:3.28, meaning that for every dollar you risk, you're going to make $3.28. So there is a chance that if you take this trade, you are selling into support, and what happens is that price might just do a rebound like that. Okay, but the other possibility is that a price has already broken this support, and this is the support that the market is looking at, and it's ready to come down. So it's risky. Okay, anyway, trading is always about dealing with risk. So if you want to take this, just make sure you control your position size, because personally, I think that the next level is here. There's a lot of space. There's about 160 pips worth of profit, and you're only risking about like 46 pips. So personally, I think it's a good trade. Okay, I will continue to send these signals out in the Telegram channel. Okay, somewhere probably a free trade or something like that. So make sure you just join the Telegram channel if you have not. So let's move on to Aussie dollar. Okay, Aussie dollar, last week I advised not to trade it because the price was congested. As you can see over here, it was congested between the support and the trend line. Okay, but now price has changed because on Wednesday, okay, this is Friday, this is Thursday, and this is Wednesday. So on Wednesday, price has broken back above the trend line. Okay, more importantly, there is confluence with this key level here. Okay, so right now, if you see this as a double bottom as well, let me show it to you. This is the first bottom, and of course this is the second bottom, and then what you will have is the neckline. Okay, let me just draw it for you. Okay, if you see this as a double bottom, then price has already reversed. Okay, and this is a low, this is a high, this is a low, higher low, sorry, and this is a higher high. So price is bullish already. The market structure is bullish, the small structure is bullish, and we're just waiting a bit for the price to come down here. Okay, hopefully we get a nice engulfing pattern or maybe a pin bar, and then we go for the long targeting here. Okay, this is a very nice setup. If this happens, this is the kind of setup that I would prefer to stick to, because it's very possible that it will happen, right? It's very close to price already, and you have confluence between the structure, market structure level, and the trend line. Okay, so again, stick to the MPE trading strategy. Ask yourself, what is the market condition? So it's bullish because double bottom, and you have high, higher high, low, and a potential higher low right here. Okay, price level is given by this level, and of course you just need an entry trigger. Now let's move on to Kiwi dollar. Okay, Kiwi dollar, it's a bit tricky because I sent this out in the Telegram channel previously, that there's actually a trend line and price acting as resistance. Okay, however, do not start shorting right away because there is support here. You can see that this is support. Okay, in fact, this is actually the neckline. Let me show you. This is the left shoulder, this is the head, and this is the right shoulder. So this is actually the neckline of the head and shoulder pattern. So this will act as support. So what might happen is that price might do something like this. You know, it might just consolidate between these two support and resistance zones, and finally make a breakout either way. Okay, so my advice would be to wait for price to break this. Okay, I would prefer to short. Let me show you why. Okay, I would prefer to short because this is a low, this is a high, and this is a lower low. Okay, so I prefer to short, but there's a support here. So ideally, I would prefer for price to break this support. Okay, let me just get rid of this. Okay, I would prefer price to break this support and then look for a short down. Okay, that's how I would trade it. I would not just start shorting here and then pray that this support will hold. Okay, very important pointer. If price were to break on above, then the next level we have is this level right here. Okay, but again, I would not be keen to short here, because if that happens, then what might happen is that price might come back down here and then start bouncing up. Okay, so ideally the best scenario to short is just wait for this level to be broken. Now dollar CAD. Dollar CAD is an entire mess. Okay, last week I'd say that dollar CAD is in a downtrend because you have a low, you have a high, lower low, lower high, and lower low. Okay, but however, we have this inverted head and shoulder pattern: left shoulder, head, right shoulder. Now, please be careful, right? Please do not chase this breakout, because right here we have this spike low here. Okay, so what a lot of traders might do is that they might trade upon the breakout of this level right here. Okay, and what happens is that if this level is acting as support, then price might just do something like that. Okay, so if you want to short this, just make sure that this low is broken. Okay, but also be careful, because if price breaks this low, by the time it happens, you know, the candle might already be somewhere here, and then you don't have much meat left, right? You don't have much profit left because price is very close to the swing low, and chances are your risk to reward is going to be quite bad. If you know, maybe your risk to reward, something like that, it's really bad. So it's not worth taking the risk. So just be very careful. If not, the other way is to look for a nice engulfing pattern here and then target this. Okay, this is more of a counter trend trade. It's possible as well, but just be very careful because it's not easy to trade it, this currency pair at the moment. Okay, if you are not sure, please stick to this kind of setups because this is easier. Okay, if you want to avoid this kind of setups if you're still new or you're still struggling. Now, dollar yen. Dollar yen last week, we talked about buying off this level. Okay, this didn't work out well. Okay, price broke down, started selling down. So right now, what we see is that this entire resistance. Okay, if you just scroll back, you will know that this is entire zone of resistance. Just scroll back somewhere over here. You can see that this here is a zone of resistance, and here as well. Okay, so this is resistance, and it's looking like a head and shoulder already. Okay, let me show it to you. Okay, this is the left shoulder. And then of course this is the head, and this is the potential right shoulder. Okay, so price is in the middle of nowhere now, and there's support here. So please do not chase the trade. Okay, just wait patiently for price to retrace up here. Okay, remember MPE. Okay, market condition right now, it's kind of not exactly bullish, not exactly bearish, not that clear. But if you use this recent swing low, it's actually a downtrend. Okay, you can see that this is a low, this is a high, and this is a lower low. Okay, so your market condition is more bearish than bullish. Your price level is this entire zone. What you need next is a entry trigger. So just be patient, wait for a bearish engulfing pattern or a shooting star, something like that over here, and then you take a shot down. Okay. Now let's go on to gold. Okay, gold last week pretty much didn't do anything until Thursday and Friday it finally broke out. So last week we say that this is a double bottom. This is the first bottom, second bottom, this is the neckline, and price has just broke above the neckline, okay, including this spike high over here, which I talked about in the last market outlook video as well. Okay, price has clearly broken above, so right now we don't want to chase the market because price is in the middle of nowhere. Okay, what you want to do is you want to wait for price to retrace. Okay, just be patient, right? Just be patient, wait for a price to retrace, form a nice candlestick pattern, and then we do the long. Okay, again, this follows the MPE trading strategy, right? Market condition is bullish because double bottom, you have a high, you have a low, higher high here, higher low, and higher high, and higher low potentially. Okay, so just be patient, the level is given to you, but we need an entry trigger at this level. So just be patient. Now let's look at Euro Pound before I end off the video with Pound Yen. Now this one, last week I said this was a very good candidate to trade because this trend line here is broken, okay, and this was a low, high, lower low, but now price has broken this, and that was the reason why I want to go long. However, if you look at Friday's price action, okay, you can see that this is a very bearish shooting star. Okay, and this is where experience counts. This is why it's important that you watch market videos, market outlook videos like this. Sorry about that, right? Because I can share with you the experience that I have. I can show you the nuances, right? Even though this looks like a good setup, okay, but if you look at the candlestick pattern here, in fact, if you were to go into the H4, you will know that there is a fake out here. Okay, so in this case, I will be very careful not to buy here because this is a fake out. So what might happen is that price might break this level and then just drop all the way down. Okay, in fact, I think it's more likely that that will happen. So if you're new, you're not experienced, right? You want to avoid this. Okay, if you have more experience, you're a little more advanced, you can actually look to trade this what we call a fake out. Right, this is a fake out, and you take the trade down. Okay, but again, this is not in alignment with the MPE trading strategy right here. Okay, we don't talk about this at all because this MPE trading strategy is for beginners. This is not. Okay, so if you do not know what we're talking about, please just skip this. Okay, but I just want to give you the levels and highlight this case study to let you know what I mean about a fake out and the importance of watching these kind of videos. So lastly, let's look at pound yen. Okay, pound yen kind of happened exactly like what we predicted. Okay, except that this entry came on Friday only. So this is going to be a very good setup. Okay, so quickly let me walk you through the MPE strategy. So this is a clear uptrend, right? This is high, this is low, higher high, higher low, higher high, higher low, higher high. So the market condition is bullish. Next thing we need is the level. Okay, so level we have of course this horizontal level, and one thing that is worth noting is that there's this trend line right here. Okay, in fact, if you were to look left and you will look over here as well, this is a swing high, and if you change the line chart, okay, this is a key level as well. Okay, it was a swing high and price almost retested it. Okay, so this is another trick that I have, switching to the line chart to find key levels. Okay, again, this is based on experience. which is why it's very good that you watch this kind of videos. So price has just bounced off this level, and on Friday it's a very nice engulfing pattern. So actually on Monday, what you can do is you can go ahead to take the trade, just set in the stop loss at the bottom, okay, because this qualifies as a trade and something like that. Okay, the risk to reward is not too good because the entry is quite high, but if you can just wait for a slight retracement, maybe enter a limit order or something like that, buy limit slightly lower and try to play around with the risk to reward, then something like this might be good. Okay, so we are looking to buy for pound yen. Okay, so that's it for this video. Again, I will leave a link to this day trading guide. It's totally free. Okay, please go grab it. Just need to input your email address and our email responder will also send it out. Okay, there's a lot of value. We explain to you the 4 stages of the market, candlestick patterns, and as well the MPE trading strategy. Okay, there's also a candlestick pattern cheat sheet, which is very, very useful. Okay, so please trade safe. Next week we have ECB, and ECB is not easy to trade, but we will still continue to guide you through our Telegram channel. So just make sure you join that as well. Okay, if not, thanks for watching. Please trade safe.